Hi, hello, and welcome to our channel. This is Nisha Jairam here. In this video, we're going to see what is tax, what are the different kinds of tax, and how did this GST, that's goods and service tax, emerge into the taxation system of India. So, with no further delay, let's get started. So, what is tax? If you go with the definition, it says that tax is some kind of burden or duty which is invested in the hands of an individual. They say that it's some kind of compulsory contribution which an individual has to pay. You might ask me, why should I pay tax to the government or why should I contribute to the government? The answer would be like, it becomes one kind of revenue or income for the government. So the government might use the tax which you have paid for the purpose of construction of any camps for the poor people, or building the infrastructure of the society, or paying salary to the people who render their service to the society, and these kind of things. And the next is that the question would be, every individual or every citizen of India who earns even a single penny, are they deemed to pay tax? The answer is actually no. So to understand this concept, we must have a clear-cut knowledge of what is slab rate. So slab rate is a threshold level which is fixed by the government of India and as well as the income tax authorities. Types of tax. So tax is actually divided into two types. One is direct tax and another is indirect tax. So once when I tell direct, what comes to your mind? Something which is very straight. So any money which comes directly from your pocket is known as direct tax. So the direct tax will usually be paid by an individual or by an organization. The three most important direct tax are income tax, capital gain, and wealth tax. The first type of direct tax is income tax. So any tax that you pay out of the profit that you have earned is called as income tax. So I already told you, once when you reach the threshold level, so until then you are exempted to pay tax. Once you reach the threshold and you are above the threshold level, you will be asked to pay tax. So let us see for the first category. So what was the first category in the slab rate that we saw? It was the individuals or the joint Hindu family, can be either a resident or a non-resident below the age of 60. So now what is the slab rate for the first category? So it is actually when you earn below 2,50,000, you are exempted to pay tax. You need not pay tax. And now the second thing, when you earn from 2,50,000 to 5 lakh, you are asked to pay 5% as your income tax. So for the 2,50,000, if you calculate 5%, you will get 12,500. And now you are getting a rebate for this 12,500 under the section 87A. So you need not pay tax. So until 5 lakh, the tax is actually exempted. And now, depending upon the slab rate, you will be asked to file your income tax with the income tax authorities. So once if you fail to file your income tax return, you will be levied with a penalty which you have to pay along with the income tax. So that's the first kind of direct tax. So what's the second kind of direct tax? It is actually wealth tax. So see, income tax is a tax which you pay out of the income that you have earned. So income tax, so it directly says. So what is the second? It is wealth tax. So when you hold any kind of possession or ownership and then you have to pay tax. So that is called as wealth tax, which is a second type of direct tax. According to the wealth tax, so there are only two things which major plays here. So one is ownership and one is the property which you hold. So in the case if this property or the ownership is not yielding you any kind of profit, though you will be asked to file your income tax. Type of direct tax is capital gain. So any income which is earned from the sale of asset or investment is called as capital gain. So investment in shares, bonds, businesses, art is also called as capital gain. So these capital assets are actually divided into two based on their holding capacities. For example, say if a person is holding an capital asset for more than 36 months, it is known as long-term asset. And again, if a person is holding the same capital asset for less than 36, it's known as short-term. And now if I say my securities and my bonds, RBI bonds or mutual bonds are listed. So if anything, the above item is listed for more than 12 months, it is known as long term. And if it is listed less than 12 months, it's known as short term. The next category of tax is that indirect tax. So before the implementation of goods and service tax, what about the different kinds of indirect tax that we actually had? We had sales tax, we had excise duty, we had customs duty, entertainment tax, octroi duty. So these were the different types of indirect tax. So on July 1st, 2017, our Prime Minister Narendra Modi, he implemented this goods and service tax. So he simply says that it is good and simple tax, but I don't know how far is that actually. Goods and service tax. So what are goods? Goods matlab any kind of clothes, mobile phones, accessory, they are known as goods. So what is service? Service is something which is intangible. You can't touch it, but you can feel the services which people render to you. So we know direct tax is paid by a person directly from his pocket. So who has to pay the indirect tax? So the end user, where we call them as buyers, they are deemed to pay the GST. So this GST is again divided into three types. One is state goods and service tax, central goods and service tax, and integrated goods and service tax. So these both central and state are known as intra-state. So intra means any transaction which takes place within the state. So state goods and service tax and central goods and service tax will be applied when a transaction takes place within the state. So it is known as intrastate a transaction. So let me give you an example. So I be a seller and I have a buyer within the same state. So a transaction is taking place between Coimbatore and Chennai, which is in the same state called Tamil Nadu. So here the buyer has to pay 18% of tax. So this 18% will be divided into two, and this 9% will be taken by the state GST, and the remaining 9% will be taken by the central part. Okay, central 9% will be taken. So this is known as intra-state transaction, and which can also be called as CGST and SGST. And what is IGST? Integrated Goods and Service Tax. So we told CGST and SGST is to be paid when a transaction takes place within the state. So the opposite of that is known as integrated goods and service tax. When a transaction takes place between two complete different states is known as IGST. Now when the IGST takes place, for example, I live in Tamil Nadu and I have my seller in Kerala. So the buyer has to pay GST. For example, if I have to pay GST of 10%, this 10% will be totally given to the government of India. Right? So here you need not pay SGST or CGST. So integrated goods and service tax is taken place when the transaction takes place between two complete different states. Thanks for watching our video. If you do like our channel, please do subscribe and give a thumbs up. Until then, signing off. Thank you.